How's it going, everybody? It's Stas here. So we have to talk about Alibaba stock in this video. We're going to break down the real risk, at least in my opinion, with investing in Alibaba stock. And we'll go over what I'm doing with this particular company. Am I buying stock? Am I staying away from it? And I want to break down some numbers very briefly coming out of arguably the most popular Chinese company out there, which again is Alibaba. So if you all find value, hit that like button. Let me know in the comments if you're investing in Alibaba or if you're staying away, and let's get right into the video. So it's obvious at this point in time, there's a lot of risks involved with investing in Alibaba and with any Chinese stock for that matter. I mean, you can see clearly Alibaba has gone from $320 per share a little bit under a year ago to now $169, and it got down to $152 just a couple of weeks ago. So the stock is well into a bear market. In fact, it is down 45 to 50% from that all-time high. So there's a lot of risk, right? The delisting risk, regulatory risk, the power of the Chinese Communist Party, the CCP. They can pretty much do whatever they want, shut down any business, from the education business, like we've seen all those, educational businesses over there in China, they're getting slammed. They can shut down IPOs. Again, they can pretty much do whatever they want, and there's many, many more risks on top of that. And in my opinion, one of the biggest risks, if not the biggest risk, is when you're buying Alibaba stock, you're actually not really buying Alibaba stock. So let's talk about that. Let's get into it. I have so many notes here on my iPad that I'm going to be reading off to you guys. I'm not sure if you can see that, but we're going to talk today, and you're probably going to learn something new in this video, as I did when I was researching and typing up the notes for this video. So Alibaba stock right now, what you're buying is the ADR, right? The American Depository Receipts. And this doesn't exactly represent the same company that exists in China. It's a shell company with various assets that represent Alibaba stock. And we'll talk a little bit about the legality behind this in a little bit later on in the video, so make sure you guys stick through. Again, I guarantee you're going to find some value. So almost every listed Chinese company we can buy outside of China is listed through a VIE structure. Through this structure, investors don't actually own any part of the actual underlying Chinese company. Like I said, that's a very big risk right here. Investors who buy shares in Chinese stocks such as Alibaba, JD, Tencent, etc., many others as well, do not technically have any ownership of the underlying business whatsoever. Under Chinese law, foreign ownership, and this is crazy, this baffles me here. Under Chinese law, foreign ownership in most Chinese industries is prohibited. Isn't that insane? And as a result of this, it is illegal for Chinese companies like JD.com and Alibaba to have any non-Chinese shareholders. So a structure was developed to circumvent Chinese law, what we mentioned before, the VIE structure, which stands for the variable interest entity. So let's go into more about what the heck the VIE structure is. Then we'll go over what I'm doing with Alibaba, and we'll talk about some numbers very briefly before wrapping up the video. So the VIE structure achieves the dual purpose of giving Chinese companies access to Western capital while simultaneously allowing Western investors access to Chinese stocks, or the shell company of the Chinese stocks, right? And pretty much Alibaba creates a shell company in the Cayman Islands, right, that has no offices, no real business, no real employees behind it, and there are a web of legal agreements created and put in place to get around the Chinese law. Because again, remember, Chinese law doesn't allow foreigners to own directly the Chinese companies, if that makes any sense, right? So the shell company now owns these legal agreements, and this is all in layman's terms, by the way. I'm not a lawyer, obviously. I'm not a legal advisor, so you must do your own research and dive deeper into this and do your own due diligence. But the shell company now owns these legal agreements which have a claim of the profits, and they don't have real recognition of actual ownership, if that makes any sense. And I know this stuff is pretty complicated. I mean, it's way more in-depth than this, but I'm kind of trying to make it very simple for you guys watching the video. And the contracts pertaining to the control of the assets and the rights to the profits are legally unenforceable. You heard that right. Unenforceable, meaning you pretty much own nothing, and they can do whatever they want, China that is, with these these businesses, and they could completely wipe us out if they wanted to. If they wanted to just completely get rid of these VIE investments, which they obviously know that this is happening. Duh. I mean, come on. They know that this is they've created a loophole in a sense, but they're not really doing anything about it as of now. And Chinese law does contain a very specific statute that covers this issue and states that any contract that intends to avoid a law is not enforceable. So any contract that seeks to give de facto foreign shareholder ownership is worthless. So pretty much, if you own Alibaba, the shell company, it's pretty much worthless. And China, like I said, could wipe out foreigners if they wanted to, but they're not doing that, at least as of now, because there are ridiculous ramifications if that were to happen. I mean, there's trillions of dollars at stake at this point, guys, because these companies, they have huge market caps. There's a lot of Western money in these shell companies. And let's be honest, if China were to just be like, okay, we're wiping this stuff out, get out, these stocks are going to zero, what is going to happen? There's going to be there's already a lot of tensions between China, the U.S., and other countries, but there's going to be even more tension at that point. And then the United States, could do something that could potentially harm China. So there's going to be a lot of back and forth if that were to happen. And to keep a cordial relationship, China's not going to want to do that. I mean, let's be honest here. They're not going to want to do that. But the idea of them being able to wipe out these shell companies, that in and of itself is a huge risk. So what am I personally doing? Now that we outlined everything here, the VIE structure, the fact that you don't actually have real access to the business, what am I doing? Well, I'm being a bit of a degenerate, guys. Well, not really. I mean, it's not that crazy. I think there's bigger risks out there. But I'm investing in Alibaba. I've been buying this. You guys in my Patreon know that. If you want to join my Patreon, that's linked down below. You get all my real-time buys, sells, call-outs, trades I'm making, option moves I'm making, long-term investments, and much more. All that's on Patreon, linked down below. But I've been buying Alibaba. I've been averaging down from 200 to the 160s. My average now is 185. And let me make this clear. I don't own a very big position. I have about 15, 20 shares across my accounts. Pretty small position because of the massive risk. I don't want too big of a position, but this is a stock that I believe in the next 3 to 5 years has the upside of 2, 3, 4xing. I truly believe that, which is why I want exposure here. But again, I don't want too much exposure given the massive risk involved. So, full disclosure, I'm in Alibaba. Let me know in the comments if you're in Alibaba. And now let's briefly look at these financials to see how undervalued Alibaba truly is right now. And I've mentioned this before, but we're going to look at it quickly. So here on Yahoo Finance, you guys can see market cap is 460 billion. That's clear. The PE ratio is 20, which for a company growing at the rate it is, that is a laughable PE. And another thing worth mentioning is the accounting out of China. That is a big risk as well. Are these numbers accurate? But for this video, we are going to assume they are accurate. So 460 billion market cap, PE ratio of 20. The price to sales has got to be pretty low. Let's look at that very quickly here, guys. Price to sales right now is under 4, which is extremely low for the growth that we're seeing here. Let's see the financials quickly. Assets over liabilities. That's important. Let's see here, guys. Balance sheet. Let's see this. Total assets about 1.6. What is this in thousands? So 1.6 billion. Or not? It can't be. It's not trillion, obviously. Let's see here. What's the liabilities, guys? Come on. Current liabilities. Okay. All you got to know is they have way more assets. Let's see current assets. They have more current assets than current liabilities and more total assets over total liabilities. So they're looking good there in terms of the balance sheet. And look at the growth here, guys. QuickFS.net is free. No, they're not sponsoring this video, but I use them to just see a quick little rundown of the 10-year data. And you can see clearly revenue growth from 2012 to 2021 has been ridiculous. They're pretty much growing at the low end, 30% per year revenue, and at the high end, we're talking over 100% back in 2012, but mostly around 50 to 75% on the high end. So this business, needless to say, guys, has a lot of risk. We talked about the VIE structure, but you can't ignore the fact that they're growing very heavily. A lot of growth in the future ahead, in my opinion, and not to mention, a lot of major investors out there are buying this stock. Monish Pabrai, Charlie Munger. So that gives me a little bit more faith to buy in myself. Although I'm not blindly buying it because they are buying it. But it gives me more faith, along with my due diligence myself, that this could be a decent investment in the next coming years. And the risk reward, as it gets lower and lower, becomes more favorable. So what do you guys think? Let me know down below in the comments. I'd love to know. As always, smash the like button if you guys did find value, and make sure to check out my Patreon. At least check it out. If you want all my real-time buys, sells, call-outs, a morning update video, private Discord access, and just a lot more exclusive stuff for me, all that's on Patreon. Make sure to subscribe to the channel as well and get your free money from M1 Finance. You get $30 from them, 2 stocks from Webull up to $1,600. All those are linked down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out.